there are three big things that are happening in my lifetime. The first is the amount of debt creation and monetization of that and how it's carrying through the system. The second is the amount of internal political, social, economic conflict that is now going on. And the third is the rising of a great power to challenge the existing world order and the existing world power, China, and the geopolitical in which, when I was born in 1949, and 4 years after the New World Order began in 45, and the United States, of course, was a much more dominant country then, had 80% of the world's gold, 50% of the world's economy, the monopoly on military power because of nuclear and all of that. And it's declined on a relative basis. And that led me to do research, which I needed to do the last 500 years of research to follow. I wanted to study the rise and decline of currencies, reserve currencies, and their empires. And I went back. And in doing that, I also discovered that their acts of nature actually had bigger effects than the first three of those, even with the wars, because of droughts, floods, and pandemics. I think that's a factor. And then number 5 was the greatest, of course, is man's capacity to adapt and invent, because in one way or another, if you look at that, per capita income rises, living standards rise over periods of time. But these big cycles and these big events are dominant. So those are, I think almost everything could fall into those 5 categories, so that's how I look at it. I think that we're in a period in which there's a supply and demand for debt and credit that is, because one man's debts are another man's assets. And there's a supply demand for credit that is having an effect on making us move into a stagflation kind of environment. In other words, the trade-offs between the two will become more difficult. But I think that number 2 influence, the political, is the most important. What I mean by that is I think we have been used to being in an environment in which economics ruled. You'd have a global economy, and those who could produce items more efficiently or cheaper would get the business, and they would raise their living standards, and other places, so it was a global competition, largely run by economic considerations, and resources would shift that way. I think we're now in, that doesn't exist as much that way. And there's been a transition to an ideological allocation of resources and so on, such as, the acquisition by Elon Musk of Twitter. It's not a financial transaction as much as it is for the purpose of it'll have controls. And when we have the conflicts such as with Disney and DeSantis in Florida and those political ideologies, it's the belief that economics has got to fall within that agenda. That'll have very big implications, I think. So when we look at the returns of equities and we look at the well-being of companies, you see that the cost of interest relative to the expected returns of equities creates a squeeze on equities, changes the economics. A lot of borrowing has been done at much lower interest rates and so on. The return on equity for a company and versus the return, the cost of debt is changing, and all of those things are changing. And like all bubbles or paradigm shifts, the mentality that did exist. We don't have to worry about inflation. Cash is a safe place, and so on, gets a shock. There's a punch in the face. There's been a 40-year bull market, and there's a punch in the face to all investors. We're going through it as Jeremy describes. And when that happens, things that were never supposed to happen, because everybody believes in the tech companies, and that which is the same as the Nifty 50 or the .com companies, they get hammered, right? So like you say, 75% decline in Cathie Wood's funds, and so on and so forth. That causes the adaptation. So we're in the beginning of that adaptation. That is most similar, I think, to the 1970s period. It becomes financial. So I think as we'll come to the 2022 elections, and that'll have economics and markets has a big impact. So we'll be in the 2022 elections. It'll be very important to not only diversify well, but to be able to be long and short different assets in order to perform well in that environment. My main things are, first, cash is trash. And we know that the typical well portfolio is not well balanced, with its greatest vulnerability being in that upper right quadrant in our box, which is the inflation box. And we know that we're in that environment. So from a starting point of view, I would encourage all investors to look at that box, those four quadrant box, that box that we have: rising inflation, falling inflation, rising real growth relative to discounted, falling real growth relative to discounted, and see what the biases are in those portfolios. I believe that now you can simultaneously reduce risk and raise returns, reduce risk of that portfolio by having more in that upper right quadrant, rising inflation, and you will reduce your risk, because if you look at your portfolio, typical investor's portfolio, that is the environment that it is missing. So I want, when I'm picking those locations, I want to be out of those debt instruments, largely minimized on the financials, the inflation hedge assets, well diversified. Look to parts of the world that are not as plagued with this. So emerging Asia is very interesting. India is interesting. So diversify. Look at neutral countries during that period of time. Watch out for government controls on capital markets, because that's the logical next step. History has shown that. Watch out for foreign exchange controls, could be. Watch out for those things. So those are the themes that I think are most important and will be most important in investing.